please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, let's focus on the next stock then. We have Dilip Buildcon. It posted a rather mixed set of numbers. The company saw solid top-line growth, margin growth as well in the Q4. To discuss that and more, we have Mr. Rohan Suryavanshi, the Head Strategy and Planning at Dilip Buildcon, who joins us on the phone line. Hi, Mr. Suryavanshi. Thanks so much, sir, for joining in. Before we talk about your numbers, sir, there's a bit of a rumor on the street about auditors raising some questions or any kind of problem from the auditors. Can you clarify, have you heard from the auditors? Is there any question on that front, or it's a pure rumor?
Hi, Nigel. First of all, thank you for having me on your show. And I'm very happy that you asked this question up front because, such false rumors also trouble us whenever whoever are the vested interest parties who end up spreading such malicious information about a company which is, doing work across India. So firstly, let me address that. It's entirely baseless. In fact, we will also be sending notice to the exchanges and right away, with the auditor also putting in his statement out. These are all misleading and false allegations. The auditor is very well much the same guy who was there earlier. And let me also tell you a bit about the auditor. He sits on the board of L&T. He's one of the most respected guys on the street. He was a former president of the Institute of Chartered Accountants of India, Mr. Chitle. So he's done that. And also to address, I think there's no qualification or anything in the on the balance sheet. In fact, we've had the strongest set of P&L and balance sheet numbers in the last 4-5 years. So it's a very, very strong both P&L and balance sheet. So all these are unfounded, and malicious rumors that are being spread out by, I don't know whoever.
Okay, so auditors, no resignation by the auditors, no qualification by the auditors on the company's books. Okay, that's the clarification. Thank you, Rohan, for that. I was just looking at your numbers, and it appears if I strip this one-time bonus, your gross margins have actually come down, perhaps lower by 300 basis points on a quarter-on-quarter basis. If you could explain the pressure on your gross margins?
No, so the thing is, all the numbers that you have to compare, even in the past, they're all inclusive of our bonuses. When you look at the annual numbers, even in the last few years, they'll always be in the same, region, and they've always included the bonus. So there hasn't been any compression, so to speak of. In fact, the margins have been very, very healthy. If you look at the annual, numbers, even though our top line only grew by about 52%.
Rohan, the one-time bonus is how much? What is the total amount that you've got in Q4?
Q4 is about 60 crores.
60 crores. All right. Yeah, you were making your point.
So I'm saying if you look at the annual, results as well, it's because our industry is we're not selling a product, we're not selling, an FMCG. When you bid for a road project, it's a 2-year road project, okay. And the different aspects of it have different profitability margins. Okay. Now, when we bid for it, when we look at the holistic picture. If you look at our annual results, our top line has grown by 52% from 5,000 crores to about 700 crores or so. But our bottom line, our PAT, has grown 72% from 360 crores plus to 620 crores. So the bottom line has grown far more than the top line has grown. So I think it's great. And even when you look at the debt numbers and everything, our working capital cycle has actually come down by almost a month and 10 days or so.
Okay. On the full year numbers, while your revenues are up 52%, your profit is up 72%, your margins have come down by about 150-200 basis points. The reason for that on a full year basis, and if you could give us some guidance for FY19 on revenues and margins.
So the margins and revenues are higher than the guidance that we've given out. So we had spoken very clearly that the full year numbers for EBITDA and all that were supposed to be, if you talk about EBITDA numbers, they were supposed to be in the range of 17-18. What we had communicated, it has gone beyond it, and it's about 18.3 or something in that range. And if I talk about the PAT margins have also increased from last year's, PAT. From it used to be 7% last year PAT, which is now 8%. So both those numbers are on the higher are higher than actually last year.
All right, Rohan, now we want to understand, going ahead. Last year, I think you had guided for around, 7,500 crores. And I think you've beat that number as well. This year, what is your target?
So actually, when we first started out, we had guided only for 6,000 crores.
Okay.
And then we had to change it to 7,000, and eventually we guided for 7,500 crores.
Okay.
Now, let me also drive in some important fact in this. What all of the work that we do it on our own. So all of this revenue is delivered by Dilip Buildcon. Unlike most the general practice in the industry is that you have subcontractors delivering revenue for you. That just gets added. Now, this number was 5,000 crores, which was the last year's top line, was already the largest base amongst all EPC companies, road EPC companies. On that, we have delivered the highest growth, which is 50% plus. So on the highest base, we've delivered the highest growth, and the average industry growth has been,
Rohan, what should we look forward to? You are telling us you have been an outperformer. That's good news. What are you going to do in this year? Yeah. Go ahead.
This year, we're targeting 10,000 crore plus of top line.
All right. So we'll keep an eye out.
And margins?
Margins will be in the same 17-18% range.
Okay.
With the basis.
Rohan, you also said that your working capital cycle has improved. What was it? What is it currently?
From last year's 130 days or so, it has reduced to 96, 97 days.
All right.
Okay. And it will reduce further. And if you could explain the higher
That is,
tax.
if you look at our last 4 years graph, it has come down significantly every year. So we are very confident that this track will continue.
And this higher tax this quarter?
Sorry?
Your tax outflow is higher this quarter. What was the reason for that?
I'm not sure about this quarter, this thing, but if I look at the overall tax outflow, it has been proportionate to how it was last year, and we are, because all infra companies qualify under 80IA benefits.
Okay.
So we are at MAT, and we have we've given tax till the MAT limits.
All right. Okay. Thanks so much, Rohan, for stopping by and giving us all those details and the clarification as well. The stock has recovered from the low point of the day. Intraday, it went to as low as around 920, 915 rupees. There's a big recovery from the lows. The key points management told us is there's no question with regard to the auditors. They're going to put out a clarification as well. They're guiding for revenues in excess of around 10,000 crores going ahead. And they're saying the working capital days has improved to sub 100 days odd, and that explains why the stock has recovered a goodish bit from the low point of the day. Nearly around a 70 rupee bump up is what we're seeing from the day's low. Well, on that note, we'll slip into a short break. You come back, we'll focus on the markets. I think before we do that, let's get a check on the markets itself now, Ani. We have Ashwini Gujral as well as Sandeep Agli with us. Ashwini, what's the trade? We have pulled back from the low point of the day. Would you still be looking to buy into the market?
See, there isn't great follow through, and private banks, particularly large ones like Kotak, etc., are moving up fairly strongly. So the sense I have is that post 12:30, once Europe opens up, there should be bigger short covering which should take the markets higher. So even right now, Nifty, Bank Nifty qualify as a buy, and we should get fairly close to the unchanged zone. I think the tire stocks have been having good days in the last few days. I think tire rally is beginning again. So CAT is a buy with a stop of 1370, target of 1415. And Escorts is looking like it's probably headed higher, monsoon, etc. So that's a buy with a stop of 930, target of 956. And ADAG is also showing upside traction. So Reliance Infra is a buy with a stop of 430, target of 455.
Okay. Sandeep Agli is also here with us. Sandeep, your trades?
I have a buy in a Equitas, stop loss of 160, target of 170, and a sell in a Sriram Transport Finance, stop loss of 1515, target 1440.
Okay.
All right. Thank you very much, gentlemen, for that. Let's see if we've got the early rates up on the European markets. Should be opening up just about right now. Yesterday, there was a global risk of emanating from the political situation and the concern over there coming out of Italy. So European markets, in fact, global markets were under pressure. Let's see what the early rates are. We await the opening on the Italian index as well. Pretty flat. The FTSE is up 0.1%. The CAC is lower by close to about 0.3%. When we come back, we'll have more clarity on the way European market is opening up, the direction it's taking. We'll also come back with more on individual stocks and on markets. Stay tuned.
There's a recovery underway. Just take a look at the Nifty. We're down only around 30 points now. TCS, that stock was trading in the red. Now it's moved into the green. In fact, it's moved just into the green. It was down more than 1%, and that's what's helping the Nifty. You have L&T as well that's pulled back some of its losses, so good news there. And Adani Ports as well is doing its jig as we speak, so keep an eye out on that one as well. The Nifty Bank, remember, was down more than 150 points. That's cut its losses as well. So we're seeing a bit of a pullback. Let's see whether or not we can sustain at these levels. But let's focus on Coal India. That posted a mixed bag in terms of its numbers. A lot of one-offs were seen. We spoke to Mr. Datta, the Chief Manager Finance of the company, on the highlights of the quarter and also the outlook for FY19. He sounded extremely confident. Let's hear him out.
For Q4, the realization overall was 1573 rupees per ton. This is on the backdrop of both the revised prices as well as we have a component of e-auction sale, which also had registered good growth. On Q4 basis, if I can say, it is 1573 in the current year versus 1495 rupees per ton in the previous year. FY19, we have already registered a growth in production of around 16% and also in offtake of around 13%, which is still running through May. We are targeting 630 almost production-wise million tonne, and so will be the offtake. So we expect a very good growth during FY19. Without the support of the railways, this sort of evacuation would not have been possible, what we witnessed in the last year. And the rake availability and the tracks, also new tracks coming up, has helped immensely. And now that two of the important lines that we were waiting for has been opened up, so it should put us in a better position for more evacuation during the current year.
All right, on that note, it's time for a short break. On the other side, Maharashtra Seamless has posted a good quarter. We'll get chatting with Ashok Soni, the CFO of the company.
Come back and just keep an eye out on the broader markets. A couple of stocks are moving around. Merck, that stock has moved higher. In fact, it's locked in upper circuit. Remember, just a couple of months ago, they had sold some part of their business to P&G. Now, in fact, the talk was, what are they going to do with the remaining business? Remember, as it is, it was debt-free. And in fact, they're going to be getting some cash as well from this particular deal of more than 1,000 crores. Plus, they had cash in their books of close around 300 to 400 crores. So close around 40% of their market cap was as is covered. Now, in fact, the street seems to be giving value to its residual business and also hoping that maybe there'll be one-time payout. So that explains why the stock is up nearly around 20%. In the last couple of months or last 3 months, I think, the stock has moved from around 1,700 to around 2,400 odd. So keep an eye on that. In fact, in the last 3 months, it's moved up nearly around 60%. The other one we're looking at is National Peroxide. That stock is up today and nearly around 4%. It's a Vadia Group company. They make hydrogen peroxide and it's moved very, very well. In this week, it's up 20%. In the last few weeks, in fact, it's given you more than 50-80% returns. And in fact, in the last 1 year, this stock as well has moved very, very well. So keep an eye on this. They make hydrogen peroxide, debt-free. They have cash in their books as well. So a couple of stocks moving around from the broader markets. But otherwise, let's focus on the next company, Maharashtra Seamless. They came out of the set of numbers a few days back. It was a good set of numbers, actually. The company's margins expanded. The profitability as well did move higher. We have with us Mr. Ashok Soni, the CFO of the company, who joins us on the phone line. Hi, Mr. Soni. Congratulations. Last quarter was good. Last year was good. Tell us how FY19 is going to be. What's the growth you're looking at in terms of the top line? What kind of margins can you do?
Yeah, thank you, Nigel. We have a good set of numbers for current year as well as previous year, and going forward, also we estimated that the growth in volume will be around 20% year on year.
Okay, and in terms of revenues?
In terms of revenue, the similar 20% growth, 20 to 30% growth. And we also have a better visibility on the back of, buoyant demand scenario and order book.
Okay.
Currently, our order book is around 950 crore plus, and for 50% of that is ONGC.
Okay.
And in anti-dumping duty, steel policy has also helped us, and definitely crude prices is also helping us because world over rig counts are also shown increase in terms of additional capex by all marketing companies as well as ONGC to increase self-sustenance of oil in terms of energy requirement will further push the capex by oil marketing companies and refinery sectors. And demand from other sectors, which power, chemical, nuclear, and other process industries are also adding the further requirement of pipes.
Okay. Mr. Soni, 20% revenue growth, value as well as volume. What about margins? Your Q4 margin spiked up to about 19.5%. Was that a one-off? And what would you guide for your overall operating margins in FY19?
So we have a similar guidance as of Q4 because as a strategy, we have focused on more value-added items.
Okay.
And also we have done a lot of, cost-cutting exercise at the plant, which is helping us to improve the margins. If you see, my raw material cost has gone down by 2%, which is again on account of increase in yield. So all this is, coming on the bottom line.
All right. So, I wanted to ask you, just a minute, sir. We have some numbers that are coming up for you on the screen. Ganesh Benzoplast, they've come out with a set of numbers. There's a one-time gain over there of, I think I just missed that number. So the net profit is looking good. But that, I think, is a large portion of it is because there is a one-time over there. One-time of around 51 crores approximately. So just keep an eye out on that set of numbers. The stock was as is buzzing before these numbers itself. Keep an eye out on that. We'll try to get the top line number as well up for you on the screen. Otherwise, that profit number is primarily because of a big net profit. Mr. Soni, we were talking about your business. So operationally, you're guiding for rather good things. What about in terms of your balance sheet? How much of cash do you have in your books? And I ask this because there is a finance cost of around 40 crores in your consolidated books. Why is that? How is your balance sheet looking?
So basically, your FSL is having an added advantage of having a strong balance sheet. We have a good liquidity position. Currently, cash on hand is around 600 crores. And on a consolidated level, the interest cost is coming mainly on account of some borrowing in subsidiaries. If you see standalone, the interest cost is marginally.
Okay. What about your order book? What was the order inflow in FY18? Is FY19 looking better? You spoke about an improvement in demand. Would FY19 order inflows be better than what we saw in FY18?
Yeah, correct.
Any
in
numbers?
In terms of current order book, we have a 950 crore plus of order book, and continuously we are flowing with the orders. It's a regular inflow. Recently, we have got 2 big orders from ONGC. And we continue to expect more orders from ONGC as well as Oil India Limited.
All right. Thank you, Mr. Soni. We'll leave it at that. That's a word coming in on Maharashtra seamless. By the way, the Italian index has rebounded after slipping quite a bit in the last few days on the back of political turmoil, questions being raised on whether Italy will continue to stay in the Eurozone with the snap elections likely to come up very shortly. Today, the Italian index has seen a marginal rebound, but I think that's been sold into. The early rate was close to about 0.8, 0.9%, now higher by only 0.5%. Get into a break then. On that note, for our own market, the little bit of an intraday recovery continues, so now above the 10,600 mark on the Nifty.
Well, keep an eye out on the screen. We have Ganesh Benzoplast. We were saying that in fact there was a one-time in the net profit, and that explains why there was such a big bounce. But besides that, there are a couple of numbers that the company has given. The long-term loan of the company has been reduced to around 95 crores. Now that was more than 150 crores on a year-on-year basis, so keep an eye out on that. And the chemicals division, that's posted an operational profit after 8 years. That's because of better capacity utilization. Remember, this was the biggest drag in its books. So that's good news. And the net worth as well has turned positive if you take a look at the balance sheet. So that explains why, in spite of that one time that we saw in terms of the net profit, the stock is running up. Operationally, the numbers look good. And these are the details that the company has given us as well.
All right, numbers in from Indoco Remedies as well, where the net profit has gone up by 14.5%. Let's move on and get in some global voices and opinion. Udayan Mukherjee caught up with emerging market specialist Julian Mayo of Fiera Capital as a part of our special series London Eye. He says the outlook for emerging markets is positive, adds that India's micros, however, are disappointing. Listen in.
There's obviously a bit of uncertainty going on at the moment, as you said, surrounding the dollar and some of the external imbalances of some of the emerging markets. But I think overall the outlook is still relatively positive because you've got positive earnings growth, momentum, if you like, in emerging markets. You've had a growth recession really between 2011 and 2015 in the asset class. You've had 2 years of a recovery of that, but I think that the trend is still positive there. Corporate profit outlook is still good at the moment. You had a big spike in profits last year again after a profits recession over the previous 4 or 5 years, and I think the outlook continues to be good double-digit growth across the asset class for this year and probably into next year as well. The macro determines your cost of equity. How expensive should a stock be? Where should it trade? What are the risks to the valuation? And so I think in the case of India, there's been this feeling that it's a good long-term story. You've got a good long-term growth story in India in which to invest. The disappointment for example, in India has been at the micro level, the performance of stock. Ultimately the stock market is a market of stocks, and the performance of the individual companies, aggregated is what makes the market where it is. We look at India and we like the businesses, we like the macro, but we're sort of frustrated in many cases by what's happening at the micro level.
Welcome back. The Nifty is at that 10,600 mark, an intraday recovery. In fact, there's been an intraday recovery on the rupee as well. The rupee has recovered nearly 40 paise from the day's low as we speak, hovering around that 67.5 mark against the dollar. As you can see, a couple of these assets are recovering from the lows. Let's turn our attention then to the commodity space. Manisha Gupta joins in as always. Hi Manisha, what do you have for us?
Well, nothing clearly is recovering when it comes to commodity markets. We have actually seen further declines, deepening declines now coming for many of these commodities. Should get the metal prices on your screens because we are more than a percentage point down now for many of those metals. Remember, Shanghai and LME have been trading on the weaker side, and with the rupee appreciating, you have seen that calculations actually go further into the negative here. So more than a percentage point down on aluminum, lead, nickel is down 1.5%. You also have seen zinc prices continue to decline as well. So clearly not panning out to be a great day when it comes to be in the metal space. It is about the strength in US dollar. It is also about US talking about putting further tariffs on Chinese goods. And then, of course, the Italy concerns are something that have been pulling the prices down. More than 2% down on copper. That's a 2-week lows that metal now seems to be trading at. Himanshu Gupta of Karvi Comtrade is joining us now to give us strategies on that space. Himanshu, hi. It is a very weak day for the base metal prices. What are you doing? Are you still selling at these levels, or do you think the few metals with stronger fundamentals perhaps are at an attractive price to buy?
Well, hi, good afternoon, Manisha. Well, clearly we are adopting a selective approach in base metals. We are particularly working on selling some of the weak metals like copper, which is actually looking further weak. And I think on the LME, we have further room of prices declining towards $65 per metric ton in the immediate short term. And while the metals like zinc, they are showing some strong ground and they are holding on to the ground. So I think zinc is a metal that we are expecting to see some recovery hereafter.
Okay. And how are you looking at the precious metal space with all the concerns in the global markets and the way the rupee is behaving? Do you see a buying opportunity there? Because we're just short of that 1300 mark in the global markets.
Well, clearly there has been some support coming in for precious metals. One of the biggest factors that is playing supportive for gold is the kind of decline we have seen the bond yields. That's the steepest decline in last 2 years. That is actually supportive for international gold prices. However, when it comes to India, the strength in the rupee is actually something that is putting pressure on the gold prices. But having said, we are working on the optimistic side alongside targets of gold, and we see every decline as a buying opportunity. Having said, if in case the prices breach below 30,800 in Indian houses, I think some technical selling, some technical weakness can take prices towards 30,500. But barring that, it remains good, fundamentally good to go long in gold.
Okay. All right. Thank you very much for that. By the way, let's get the chart up of Marksans Pharma. The stock has reacted positively this time around. The company has reported a profit of 4.3 crore, which would compare with a loss of 2.4 crore on a year-on-year basis. Even in terms of revenues, there is a sharp increase. So I think the standalone revenues are now at 87 crore versus about 54 crores. So big jump in the company's revenues. Do you have the EBITDA figure?
No, I've not calculated that actually, Rima, but I'm just looking at the markets actually on the whole. The Nifty bank that was down more than 100 points when we started off the show, that's moved into the green. The Nifty now is down only 20 points. At the low of the day, it was down nearly around 70 points. And there are a lot of stocks that are seeing a big recovery from the lows. So yes, we have been getting a couple of these numbers that are looking good. Like Rima mentioned, Marksans Pharma look good. Earlier, we got Ganesh Benzoplus as well from the broader markets. But the frontline stocks, they are seeing buying Kotak Mahindra Bank, TCS, India Bulls Housing Finance, all of them have moved to the high point of the day, and that explains why the Nifty has seen a big recovery from the low point of the day. But that's it from Rima and me. We are done on Halftime Report. You stay with us. Business Lunch comes up next.